Right now, we're witnessing one of the biggest financial revolutions in history. Cryptocurrency isn't just a passing trend. It's a technological shift that's reshaping how money and assets work. The opportunity in crypto today is similar to investing in stocks decades ago. Because right now, cryptocurrency is one of the biggest opportunities in the financial world. But here's the problem. Many beginners jump in without understanding the basics, make costly mistakes, and fall for scams. If you're watching this video, you're already ahead of most people, even if you have zero experience. In today's video, we'll cover about understanding crypto and its key terms, choosing the right cryptos to invest in, where to buy, store, and secure your crypto, safely storing your crypto to avoid hacks and losses, crypto investment strategies, how to research and analyze cryptos, both fundamentals and technical analysis. Let's dive in. Hey there, ladies and gentlemen, my name is Joe and I'm the CEO of Tradex. Here on this channel, we simplify trading and investing across Forex, crypto, gold, stocks, and F&O. Whether you're a complete beginner or an experienced trader, you'll find everything that you need to succeed in trading and investing right here on this channel. All the tools and resources that I mentioned in this video are linked in the description box below. So do check them out at the end of this video. Now let's get back to our step-by-step guide on investing in crypto as a complete beginner. So before you even start to invest in crypto, you need to first understand what actually crypto is, or cryptocurrency. Now, what is a cryptocurrency? A cryptocurrency is digital and decentralized form of money that operates on blockchain network. Unlike traditional money like fiat currencies like US dollar or euro, crypto is decentralized. That means no government or central bank controls it. It's secure and transparent. Every transaction is recorded on the blockchain, making it publicly verified. Scare. Many cryptocurrencies have a fixed supply, which prevents inflation. The most important thing to understand is crypto is not just a new form of money, it's a technology revolution. Here are some key terms that every beginner must know. Let's get into it. First up is blockchain. Blockchain is a digital ledger that records all transactions in a secure and transparent way. Every transaction on the blockchain is stored permanently, making it nearly impossible to alter or hack. Second is decentralization. Unlike banks, cryptocurrencies don't require a central authority. Means unlike banks, where one institution controls everything, crypto is run by a network of computers. No single entity has control over it. Next up is Bitcoin, BTC, the first and the most valuable cryptocurrency, often called as digital gold because of its scarcity. And also it has a limited supply, only 21 million will ever exist. Moving on, Ethereum. Ethereum is a blockchain that enables smart contracts and decentralized applications that allows developers to build decentralized apps, dApps. It's like App Store for crypto. Next is altcoins, any other cryptocurrency other than Bitcoin. Some major ones include Ethereum, Solana, and Binance Coin, BNB. Next up is stablecoins. Cryptocurrencies are pegged to a stable asset like US dollar. Now these are tied to stable assets like US dollar, so they don't fluctuate much. Examples are USDT, USDC, and BUSD. Moving on, market capitalization or just market cap. The market cap is the total value of cryptocurrency. Next up is liquidity. Liquidity is how an asset can be easily bought or sold without affecting its price. Next up is wallets. I've already made a video on wallets, so you can check them out over here on the iCard or in the description box below. Now, wallets are tools to store your crypto securely. There are two types of wallets, hot wallets, which are online, and cold wallets, which are offline. Next up is public and private keys. Your public key is like your bank account number, while your private key is like your PIN. Never share it. Now that you understand the fundamentals and the key terms that you need to know about cryptocurrency, let's now move on to picking the right cryptocurrencies to invest in. Alright, the biggest mistake that most beginners make is buying random coins because of hype. This is exactly how people get wrecked or make losses. Look, not all cryptocurrencies are good investments. In fact, most crypto projects fail because they lack real-world use cases. So if you don't want to get yourself stuck in this phase, follow the simple 3-step rule of choosing solid cryptocurrencies to invest in. The first one is to focus on blue chip cryptos. For beginners, the safest investments are the most established cryptocurrencies. First, obviously number one has to be Bitcoin, BTC, because this is the most secure and widely adopted cryptocurrency. It's often seen as digital gold. The next one is Ethereum. Ethereum powers smart contracts and decentralized applications, making it essential in the crypto space. These two are long-term plays that have stood the test of time. Second is evaluate altcoins carefully. If you want to invest beyond BTC and Ethereum, look at Solana, Solana is a high-speed blockchain for decentralized apps. Binance Coin BNB, it's used within the Binance ecosystem. And then there's Chainlink, or just Link, connects real-world data to smart contracts. You can check all of them out. We're going to be talking about fundamental and technical analysis later on in this video. But before that, ask yourself these questions. Does the project or does this crypto solve a real-world problem? And does it have long-term adoption and development? Does it have long-term potential, or is it just a hype? Now let's move on to where and how to buy crypto. Now that you know which cryptocurrencies that you need to invest in, now let's talk about where and how to buy crypto safely. One of the biggest mistakes beginners make is choosing the wrong exchange or buying without understanding fees, security, and order type. Let's go understand this step by step. Step 1 that you need to do is to choose a reliable crypto exchange. A crypto exchange is a platform where you buy, sell, and trade cryptocurrencies. However, not all crypto exchanges are safe and beginner friendly to use. Now, these are the types of crypto exchanges: centralized exchanges and decentralized exchanges. First, let's talk about centralized exchanges. Centralized exchanges are run by a company and offer high liquidity and ease of use. Best for beginners on screen. These are the easiest for beginners. All you need to do is sign up, deposit money, and buy crypto just like stocks. Examples is Binance, Coinbase, Bybit, and more. The second type is decentralized exchanges. These allow peer-to-peer transaction without a central authority. It means that decentralized exchange allow you to trade crypto directly without any middlemen. Examples are Uniswap, PancakeSwap, and more. Decentralized exchanges offer more privacy but require crypto wallet to use. For beginners, stick to centralized exchanges because they're easy to use and beginner friendly. Once you've chosen an exchange, follow these steps. Step 1 is to obviously register an account. Sign up with a strong and unique password. Step 2 is to verify your identity, which is your KYC. Most exchanges require ID verification for security. The third one is to enable two-factor authentication. Use Google Authenticator or SMS 2FA for added security. Step 4 is to set up a withdrawal whitelist. This prevents unauthorized withdrawals from your account. Step 5 is to deposit money. You can do it by bank transfer, credit card, P2P trading. Step 6 is to choose your crypto. Either it's Bitcoin, Ethereum, Solana, or etc. Step 7 is to select your order type. Now there are 3 main order types: market order, limit order, and stop loss order. The market order instantly buys at the current market price. The limit order lets you set a price and buy when it reaches to a certain level. Stop loss order automatically sells if the price drops to a certain level and then continue. And step 8 is to confirm and buy or sell. And one more thing, be aware of scams. Never click on links from emails claiming to be from your exchange. Always go directly to the website. And here is a security tip. Never store all your crypto in an exchange for long term. I'll explain why in the next session on wallets. If you want a structured approach across Forex, crypto, gold, stocks, and F&O, check out the Tradex entry formula. It's designed to help traders master with clear and actionable steps. The link is in the description box below. Be sure to sign up for the waitlist so that you'll be the first one to know when it launches. Okay, now you bought your crypto, what's the safest way to store it? Again, I've made a video on this. You can check it out right here or in the description box below. One of the most important rules in crypto investing is that if you don't truly own your private keys, you don't truly own any crypto. This means storing your crypto on exchanges long term is risky. So where exactly should you store your crypto safely? There are 2 types: hot wallets and cold wallets. Hot wallets are online storage for convenience. It's best for short-term storage, trading, and everyday transactions. And some of the apps are Trust Wallet, great for mobile users, and MetaMask, best for Ethereum-based token. The pros of this is that it's easy to use, quick access for trading, and free to set up. The cons of this is that it's vulnerable to hacking because it's connected to the internet. If your device is compromised, you could lose your funds. The second type is cold wallets. These are offline storages for maximum security. Cold wallets are best for long-term investors who want to maximize protection against hackers. The first one is Ledger Nano X. The second one is Trezor Model T. Ledger Nano X is industry-leading hardware wallet, and Trezor Model T also comes with high security but has touchscreen. The pros of this is that it's completely offline, no risk of hacks. You can control your private keys, and it's ideal for a long-term crypto holding. The cons of this is that it costs money for you to buy a hardware wallet. It starts from $50 and goes all the way up to $150 or even more. And if you lose your recovery phrase, your funds are gone. Alright, so the main core topic of this video: how do you actually make money in crypto? That is exactly why you're watching this video for. Now that you have crypto safely stored, let's talk about how to actually grow your investment. Here are 4 beginner-friendly strategies. The first one is dollar cost averaging, DCA. the safest approach. How it works is that you invest a fixed amount of money into crypto regularly. Example, every week or month, no matter the price. Now, why it works is because it removes emotions, reduces the risk of buying at the wrong time, and works best for long-term investing. For example, let's say you invest $100 every Monday into Bitcoin. Over time, this smooths out the price fluctuations. This is the best strategy for beginners who don't want to time the market. The second type is holding long-term. You might be thinking the spelling in here is wrong. I'll tell you why. Holding is a term derived from misspelling of hold in the context of buying and holding Bitcoin and other cryptocurrencies. Holding is commonly come out to stand for hold on for dear life among crypto investors. And how holding works is that you buy and hold Bitcoin, Ethereum, or other solid projects for years instead of trading. And why it works, you may ask? Crypto is highly volatile in the short term. Over time, Bitcoin and Ethereum have shown passive long-term growth, and it avoids panic selling when the market dips. For this, the example could be, let's say you buy $1,000 of Bitcoin in 2015, it would be worth more than $100,000 today, or whatever the current market price is. The third strategy is staking. This is to earn passive income. How it works is that staking lets you earn rewards by locking up your crypto in a blockchain. And why it works is that you can earn passive income while holding. Works best for Ethereum, Solana, and Polkadot. The fourth strategy is trading. Higher risk, higher reward. If you know technical analysis, you can trade short term. How it works is that instead of holding long term, you trade short term price movements for profit. And why it works is because it has potential for fast profits, and it requires technical analysis skills. But trading is risky. 90% of traders lose their money. If you want a structured approach across all financial markets, including the crypto markets, then check out the Tradex entry formula. The link is in the description box below. Moving on, let's understand how to research and analyze cryptos. Like I told you earlier, we're going to talk about fundamental and technical analysis. If you want to invest wisely, you can't just buy random coins because of hype. You need to do proper research. Let's understand how you can do that. Fundamental analysis, FA, how to pick strong projects. First, you need to look at market cap or market capitalization. This tells you how big a crypto project is. Higher market cap, more stability. Next is total supply and circulating supply. Check how many coins exist and if there is a max limit. For example, Bitcoin has only 21 million cap. The next one is use case and adoption. Is this project solving a real world problem? And who's using it? Development team. Are they legit? Do they have experience in blockchain? Ask yourself these questions and do some research. The next is roadmap and partnerships. What's coming next for this project? Do they have strong backers? And more. Moving on, technical analysis, TA, timing the market. Once you find a solid project, you want to buy at the right time. Here's how. Support and resistance. Identify key price levels where buyers and sellers react. Next is moving averages. Use 50-day and 200-day moving averages to find trends. The next one is RSI, Relative Strength Index. Measures if a crypto is overbought, too high, or oversold, too low. Alright, ladies and gentlemen, that's everything that you need to know on how to start investing in crypto the right way. Look, crypto investing doesn't have to be complicated. If you follow the step-by-step guide, you'll be on the right path to building long-term wealth. If you found this video helpful, smash that like button and subscribe to the channel, and subscribe for more content like this. Drop a comment below of your thoughts or any questions that you have, or maybe any future video ideas that you want me to make. And thank you so much for watching, and I'll see you in the next video.